channel's not that bad. It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice. We have the Neutrl team today. Neutrl, Neutrl. I always mistyped it whenever. OTC, stablecoins. See if we can play some music or something.
How you been, bro? Tell me what's up, what's going on.
Good. Ayo, busy. I mean,
how's the
all
new
the
fun
announcements
going, bro?
from the
How's the
past
new
week.
fun going, bro? How's the new?
It's the first time I'm number one on Kaito, bro. In the on like a 24-hour setting. I was like, oh, man's a yapper.
Is it? What did you yap about that got so high? Oh,
no,
because of the fun
just the
thing.
announcement. Yeah. I was like, damn. Okay, this is how you farm yaps.
All right, no. Do 10 more, open 10 more funds.
Open 10 more funds. Yeah. Oh man, no, but been good. Been busy. We have deployed some capital. I guess if you're listening to this and you're in DeFi, we can work with you and so on. But yeah, I mean, it's a yield fund. It's I should do a better job of selling it, but yeah, bro, I'm long Bitcoin and long yield. Hence why we are talking with Neutrl. Hey, it's a good segue.
Let me see.
Man, buying alts are tough, bro. That's why all of these alts are doing OTC deals with the Neutrl team. There you go.
Oh, but actually, that's the thing, right? I personally think, is anyone here yet? Let me see, is there any questions or any bullshit? But let's talk about casual OTC. How you, as a fund yourself, how do you structure them and what are the common settings, etc., etc.
I mean, our mandate is not OTC, I guess, but if you're a yield fund and you want to make money from OTC, you're essentially doing what the Neutrl guys are offering. So they're automating it for you, and I'll let them speak for themselves later. But for funds, I mean, if you have a discount to premium, let's say 30 to 50% discount, then you just short to lock in that premium. So it's more of a layup trade, I would say, for liquid funds. I don't think a lot of pure venture funds do this unless it's a long-term positions that they want to accumulate. But a lot of the trading desks just do it. I mean, if you can put 5 to 10 million chunks and you can get 20 to 30% just like that, I mean, hey, that's a lot of free money. I mean, of course you have to hedge it properly and so on. So again, that's I think it's interesting, right? I mean, it's part of this broader trend to tokenize or almost turn these strategies into stablecoin. Now, I mean, we will speak with them about the scale, about the risks, but I think the world is going to be going into that direction pretty much.
Hey, by the way, do you want to share the screen for the slides first?
Yeah. The slides.
Yeah, so for people who are not aware, typical OTC sales works this way. For example, you talk to the project team, or the project team pitches you. They'll be like, hey, would you like to buy our tokens for X amount of discount, for X amount of lockup? Let's say 20% discount at 6 months lockup. That means that in 6 months, technically, you'll have X amount of tokens, right? So what Neutrl does essentially is you can short it. So in a way that you have a delta neutral position that you can lock in the discount because first there's a discount 20%, right? Secondly, there's also likely the yield from the funding rate because of the most funding rates are positive typically. But yeah.
Let's see, what is this?
Hey guys.
My screen is bugging out. Okay, there you go. Hey, Behrin.
Yo, what's up, Brian?
Yo, I'm behind the scenes here.
How's it
No,
going?
we just went live for a bit, but
yeah, so you're live already.
Oh, perfect. Well, great to meet you guys.
Perfect. We were worried for a second. They're are you docs or something?
No, I am docs, right?
Okay, got it.
Important.
For sure.
Before we get right into it, do you mind? I sent you the link in the group. Would you mind sharing that out and etc. Right now we have around 100 people in here ish. If we spread it out, then maybe we can kick right into it.
Okay, perfect.
Where are you calling from, sir?
At the moment, I'm in Dubai. Yourself?
Nice. Oh man, nice names merge, by the way. I like that green color.
Yeah. We started doing some marketing, so we just got a few little T-shirts, right, at the moment for the team. But yes, I think the green is in, right? It's
Nice.
it's in Uniqlo as well at the moment.
Yeah.
It's in you. Got it.
Okay. A little bit background of the story. Just to let you know what's up. Like, so I'm Tulambro. I'm supposed to be the edgy one. Marco is supposed to be the more legit, like front-facing, nicer guy. If I ask you any questions that you're uncomfortable, you can just tell me to fuck off a little bit. Then we can change the topic. We normally start off with our podcast with something called rapid fire questions, which we'll ask you a question. Feel free to keep the answer short, just to warm you up, and then we'll just ask you a few questions, about the protocols, about how things works, some thoughts on like potential catalysts or obstacles in developing the protocol, kind of thing.
Okay.
And then in the end, we'll probably ask you, do you have any question for us? And then we'll end with like a classic question that we ask every time.
Okay. Perfect. Sounds good.
Yeah, and just for context, we started a bit earlier to sort of like roughly introduce to the audience sort of like what Neutrl is, but definitely would love to hear a bit more of it from your word directly later. Anyway, let's jump straight into the rapid fire questions, and thanks again for being here, Behrin.
Okay, the first one is tech, community, or token price. How would you rank them, and what's most important?
Yeah, that's a good one, right? I think if you've been in the space for a while, like I initially got into the space because of the tech many years ago, but I think we've seen as from a trader perspective, token is very important on the price because then you actually lose community, but there's still really good tech in the space. So I think if you look at underlying tech, it's great, but I mean, we in the trading protocol, right? We're trying to bring the highest on-chain yield right now. So token price is very important for us on everything.
Love it.
100%. Do you think we have too many stablecoins already?
Honestly, right, before even deciding to do Neutrl, we used to run this trade. And one of the things I think in crypto that really has PMF, especially from a trader's point of view, as being
Absolutely, yeah.
trading venues. So sexes, whether it's like sexes or hyperliquid or whatnot right now, perpetuals, and stablecoins or synthetic dollars. And I think what we're seeing right now, yeah, there's a massive stablecoin meta. A lot of them are just copycats or just like wrappers on like Aave earning like 5% and then doing token emissions or whatnot. I don't think there's too many. I'm just happy that the people are excited in the space again, right? And it gets actual new capital in, which is quite interesting.
Nice.
Got it. All right.
What's your prediction on the next UST like rest cycle?
Ooh.
Is it DAT? Is it something else?
Look, the DAT is interesting. I think it really depends how it plays out. Of course, like we all know what's happening with Bitcoin, and it's done pretty well on the strategy side. But this is trying to be replicated across many tokens now. I think the interesting one is there's actually a few that's going to be announced pretty soon. I'm seeing like 5 or 6 different DAT investment deals to do, like personally, and I'm like, who's actually buying this token, right? Like, why are people buying the actual share around it also and being locked up? So, I mean, look, I think it sucks up a lot of retail capital, but I think the cycle is a lot more stronger, right? The bigger blue chip players have seen what's happened over the last like 4 years. There's a lot more like actual thought around products and a lot more like scrutiny around actually how things are built. Like, I mean, if you look at Athena's USDE, when it first came out, everyone was flooding it, but I still think it's probably the greatest thing that's come out of this cycle around PMF.
Agreed.
Besides hyperliquid, right? I think so. If you execute in a good nature, I think it's fine. Yeah. See that?
So there's no more UST this cycle?
I mean, there's always going to be something that's super under collateralized or risky, right? But I don't know if it actually gets to the level where UST actually affects the entire
because
system.
the bull market hasn't been long enough. Like
Yeah.
I think like there's a time element into this where people just slowly take more risks. Because right now, when you're taking risks, people are still criticizing and thinking about it fully.
Yeah, definitely. Everyone's thinking at the moment, right? Last year, no one was thinking.
No one
With
was talking
memes,
about it.
yeah, but I mean, everyone is
or
thinking. Yeah,
yeah, and,
All
and,
right,
and this
next
space is,
question.
it's getting more mature, bro. Like there's no more like YC companies just like wrapping USD yield.
yeah.
Yeah.
I mean,
Anyway,
yeah, that's a conversation for another time, maybe.
All right.
Okay.
Last question. Last rapid fire question. What's the key in? What do you think is the key of winning the stablecoin race?
Look, there's big players in the space already. You have to have something that is completely different, whether you're trying to actually bring on real trading yield that's higher than what's actually accessible right now. I think the other aspect will probably be use case, right? It needs to actually have some use case besides just being a tokenized version of a trade. So it'll be around how the actual stable synthetic is being used across multiple players, composability, collateral. Yeah, like my bigger
The
thing. My
flywheel of
bigger
the
thing
stable
is like I
itself. Yeah.
hope like we get to a point where NUSD, and that's a bigger plan, right? It becomes an on-chain like savings vehicle. So somebody who doesn't understand DeFi is just sitting in like an easy mobile wallet, and they're earning some yield on it. But
Building liquidity, essentially.
yeah.
Nice. All right. Do you mind doing some quick self intro about yourself, your background, your journey, etc.?
Yeah, sure. I can give you my quick background. So I started off very TradFi many years ago. I was at JP Morgan for a long time in equities, and then I moved into VC private equity, where we had a $20 billion book, mainly investing in banks, asset managers, insurers, but very old school incumbents. At that time, we did a few early sexes in crypto, so like around 2016, 17, and those started doing really well. Introduced those to DCG, and they expanded pretty globally now. And then I went to business school, right? Something I thought I would never do because I think it's yeah, the ROI doesn't make sense often. But realistically, I think COVID happened and I had an existentialistic crisis. I was at a place where I probably could have just settled down and done well. But I said I wanted to try something new. When I got in there, it was really around DeFi summer. And I was like, I'm not
Summer,
actually
right,
going
yeah.
back to JP or Goldman or anything. I just want to like fall into this fully. And then I just got around a lot of DeFi back then. Then it was a lot more tech heavy, right?
Yeah.
And then just got into a lot more DeFi yield farming and trading. And I think since then, yeah, never looked back.
Nice.
Well, like what was like, I guess before we go into like Neutrl, like what was like one of the, I guess like most memorable memory from DeFi summer that like hooked you in? I guess like was it the airdrop or like was it like borrowing from Aave? Like what was the first?
Making
yeah.
money, bro. First time making money, bro. Like tons of money very quickly.
Simple questions.
Yeah.
I was farming pool 2 and dumping it on the first block. It was-
I
it was
mean,
like-
I think to be honest, a little bit after, right? Yes, I think the money thing really helps, but like largely, you could see the bigger vision from like the bigger founders back then. Like they were very accessible. Like you'd meet them, you see what they were trying to do and replicate out of TradFi or make a bit better in a whole different new economy. And one of the best like memories I had was actually meeting like Tien, the founder of Pendle.
Yes.
And we just walked around a mall for like 4 hours. This was before Pendle was huge, right? It was like, man, it was so cheap back then. But he had such a good vision, and I was just like, that was the best memory. Back then, everyone was super accessible, and anybody with a big idea and really good execution and like strong grit, I guess, staying power, you knew you could probably try and do something. You met like authentic people.
Got it. Interesting.
Nice.
All right, maybe we can jump into sort of like what is Neutrl for our audience. I know we gave a brief context at the beginning of the live session, but yeah, would you mind explaining it a bit further?
Yeah, sure. So Neutrl, the bigger mission here is to bring the highest type of yield on chain in a synthetic dollar format. What we do is we actually tap into the OTC arbitrage trade, which is largely means buying tokens of the top 100 protocols at a discount to what their market spot value is, and then hedging that exposure. So when you actually think of it, over time we hope to bring the most sustainable yield actually on chain, because this is yield that doesn't actually fluctuate that much with like market sentiment, like normal like cash and carry basis, which there are a lot of DeFi protocols doing that now. There's a higher margin here just due to the actual discount that we initially get.
Yeah, so I just pasted this image from your LinkedIn, but yeah, I mean, like, I know that the next slide is like the introduction, and we can talk about this, and maybe like Lambro, if you have any like specific questions. But yeah, we would love to dig a bit deeper into like how the entire like flywheel and like mechanism, I guess like yeah, like how like what are the risks that people are taking and so on.
Yeah, sure. So, I mean, we're in private beta at the moment, just running just over 40 million. We're testing the synthetic. We just had 2 audits done now, so the public side will be open pretty soon. But largely, this is the kind of flywheel once it's public. What happens is a user will come in and access the protocol and be able to deposit like USDC, and USDE at the moment. What happens behind that is those funds are then used to actually do 2 things. So there's a portion that's ODC arbitrage, and the other portion is actually just liquid yield strategies. On the liquid yield strategy, it's similar to how Athena's run, where when you deposit in Athena, they buy a spot like Ethereum or Bitcoin, and then they short the perpetual. On the OTC arbitrage side, we actually use custodians, we use like off-exchange settlement, like Copper, Clearloop, etc. And then we're able to buy tokens at a discount from foundations. For instance, we can buy like AVAX or SUI or Solana, etc. at a pretty decent discount. And at the same time, systematically open like the hedge on it on multiple exchanges like Binance, Bybit, OKX, Coinbase International. Yeah. And then over time, right? That's the trade. But then over time, once you're in the protocol, you get this NUSD token, and that token, once it's staked, actually generate the yield, get paid back to you, similar to USD.
Nice. Can I maybe I can do a version that I understand, like for context, this is my first time speaking to him in person, well virtually. So from what I understand in the Gig book, and what I think I understand is that, so essentially it happens as this way. When you deposit money in the protocol gets deals, let's say SUI 20% discount, 6-month lock. What they do is, first, let's say SUI is $10 now, and then they can buy it for $8, but it locks for 6 months. And then the protocol would hedge it in 6 months to 6 months. So first they lock in the 20% profit as yield. The second part is, if the funding rate were to be positive, which is most of the time, their shorts will be earning funding rate yield as well, rounding up, let's say 9 to 10% a year. So realized probably like 4 or 5%. So this trade within the treasury would earn 25%, and these are the yields that would be routed to SUSDN yield, and depending on how much people are staked, etc., they would get the right amount of yield, kind of thing. Did I miss anything?
I think that was a perfect summary. The only thing I would add is that so a lot of the collateral that we can use that's locked, we can still actually earn staking yield on it as well. So it also juices it a bit. So it's
so the collateral that you, as in like the coins that you've bought from the foundation, you're also staking it, so that's another.
It's locked,
yeah.
It's like a maximized delta neutral thing.
Yeah. So but I guess just very.
Sorry, I'll just call it treasury. I don't know what is it called. Like your whole strategy. Supposedly it will. I'm assuming it's going to be like always delta neutral, and you have like do you have like a acceptance for the delta drift or whatever, etc., like that? Like are you okay to take some delta or something like that?
No. So I think like if you're running a prop shop, to be honest, like this trade is not a new trade, right? It's an institutional trade.
Yeah.
It's done by a lot of the big market makers and big funds who get access to it. If you're running a prop shop, you can buy ODC discount, and then you can just sit naked and take the chance, right? If you want. But I mean, if we're actually doing it in a risk management way, and we're trying to like package it into this, we don't want to take any delta, right? So even like the leverage we take is max 2x. for shorting. And also the tokens we would actually do this with is not going to be long tail stuff. It needs to be enough open interest.
Yeah.
It needs to be enough volume on that actual token. And like we analyze the data, like no new TGEs. So like it needs to be tokens that have been around for a while. You can actually look at this at multiple venues because you don't open the actual hedge on one venue. It's also safer to do it on multiple venues and different portions. And as soon as we actually get the tokens in our custody, we will be hedging this. So it's not like just waiting and hoping. And I think the difference is that if you actually run like quant analysis on it, like a lot of the team has worked at market makers or other actual trading fund and crypto for many years also. On the top 100 coins, very few actually like 3x or 4x, like realistically. And then you take into account actual token unlocks coming in the next 2 years. There's around like $55 billion in like top 100 like coins. It's very important to actually manage the risk before you enter this trade. So on that side, we're never going to try and take delta. Like it needs to be delta neutral.
Quick question on the risk side. Like, is it fair to say, or perhaps I should make it more of an open-ended question? Like, what do you think is like the biggest risk that we should be most aware of? Is it just a very, I guess, like unlikely scenarios in which the funding turns like negative, and then of course, but even if that happens, you would just forego the yield. It's not necessarily gonna go negative on the balance itself, right?
Yeah, the biggest risk I see. So many people think it's the funding rate going negative. And I think you hit the nail on the head there. Because of the discount that we initially have, the funding rate can go negative over time, but it's a very small portion of the actual yield that's coming out, right? It's largely the discount unwinding, and then the staking yield often like counteracts some of the funding. Right? And then also most altcoins over the last 2 years, like the top 100, they go negative, but like 75% of the time they are positive. So that's like a different angle to it. The biggest risk I say is the actual hedging side, right? It's collateral management on the actual OTC side. But this is why when you're doing it, like every OTC deal we do, firstly the book is split into two parts, right? There's OTC and there's liquid. Of course, for marketing, it's brilliant to just say, yes, this whole thing's OTC, right? And whatever, everyone's selling. But realistically, it's only like 20% of the book is actual OTC. It's just the ARB that you're able to get from that 20% is around like 60-70% APR, which is wild. That kicks in on the liquid side. On the liquid side, that other 80% is still be able to actually use to generate on like yield-bearing stablecoins or like liquid delta neutral, which is like what Athena does at the moment on their side. And then sometimes using like things like USD, you actually get a capital like kick also, which is efficient. I don't think most people realize that or actually utilize.
You mean shorting on Bybit, right?
Yeah.
With USD.
Exactly.
Nice.
Yeah. So you basically can use USD to your benefit as well, which is like brilliant for something like us. But then
100%.
But then concentration risk is important. You can't do this in 1 or 2 or 3 or 4 deals. It needs to be very small. Even at 20% needs to be quite diversified.
Got it.
Okay. Marco, by the way, people in TG is saying that can we zoom in a little bit more on the slides if possible. Okay, asking a few questions. Like I assume everyone understands the mechanics. Let's ask a little bit of the dynamics and how we think about it to see. So what are the things that I should use to predict how good the yield will be? Because the thing is, like, I don't know what deal is coming in. I don't know what's the how long each deal is, etc. Like for Athena, I can approximate look at their capacity and blah blah blah, the kind of thing, right? So how will I think about this?
So as we speak, we're actually going to come out with a proper transparent dashboard that has a lot more information than I think most players in the space.
Alpha.
So it will actually be able to, you'll be able to kind of work out your cash flows and how you think yield will play into. But I think the bigger thing here is to look at the markets, right? And it's up to us to actually educate this. This is a very private industry that does this trade, and often they don't want to share this information. But on our side, I think as long as we can find a balance where we're not actually damaging the trade ourselves for users, we can actually show cash flows that are expected and what's going to be predicted there. On the OTC discount side, it's really dependent, but it's really goes through cycles. So largely last year, you were getting pretty good discounts like around like it's typically between 20 and like 60-70%, but largely that's dependent on how long the vest is, right? So if you're doing the shorter type of deals, which we have been doing a lot of it and like just rolling at the moment, which is safer for us also, basically the discount will come down to like 30-40%, and then you're able to negotiate, right? A lot of it is actually negotiation with the foundation or the early investor or VC that's trying to recycle their book. So the way I see it is that a user will have enough information to work out like the actual yield that is expected, but realistic like capacity on it. If I like just jump on these questions here, look, I think the OTC market size isn't really dependent on like bull or bear. So last year it was like foundations and treasury selling. This year it's like VCs. And they don't mind selling
Right.
because token prices are down, especially on a lot of the L1s, L2s, etc. But they still way up from the initial like investment. So for them, it's like they rather come in and they can recycle capital back into the space. And these are like legit VCs. They're not predatory type of players, right? They're actually guys that
And they're still jits. Is that what you're saying?
like this market is like. No,
Yeah, I know.
they're not.
I know. Sorry.
No, I mean they're pretty big. They're pretty good, and they actually do have DPI. They return quite well for their funds. But I understand like why they would want to like move into
Part of the game. Yeah.
There's too many tokens. There's way too many tokens, and now we're going to a big unlock cycle in the next like 2 to 5 years. So I understand what they're trying to do. So yeah, hopefully that answers it. You won't be able to work it, but on the actual size right now, we have like 350 million actually of supply of good deals I could deploy like today.
Okay.
So we've been working on this for a while. The actual OTC side, I think, goes to like 2 to 3 billion if you really wanted to go like shifting around and look for it. But remember, we are only trying to be a portion of it like OTC, right? So
Yes.
Right.
so I think
It's just a starting point and the novelty point for people to take notice, which I think is a very good strategy.
so we have 350 I could deploy like literally this week, if I had the capital. If we
That's
had the
amazing.
capital, but we're in private now, running like 40, and we like just making sure it's good. But there are guys who will keep approaching like really good tokens, good deals.
Okay.
I will send you a follow-up DM after this. Anyway.
A question is like, so if people know that you just, right, let's say assuming you're not if you're taking these OTCs from foundations, right, like chains or projects directly, if they know does that affect the deal structure because they know you're just going to delta neutral and earn yield, but not like, oh, I'm bullish, not like those directional books where they were like, oh, I'm bullish on you, that's why I'm like, those kind of thing. Does that affect the terms, or does that make them want you less, or what does that change the dynamic of it?
I think it's a very good question, right? Because there are different guys that do this OTC trade. Most of the funds that are doing it, that actually have a lot of capital, are running this delta neutral. So it's like quite well known, at least with the foundations and teams and VCs. The thing is, like, at the end of the day, what happens is they often get very bad actors. So guys do this, and then they come into an order book. You can literally, like, we obviously looking at order books the entire day, right? But you can look at how messy some of these guys do it, and they're not really like gentlemen about it. But like realistically, like you should be able to sell this to. And there's really good funds that actually do it properly, right? They do this, they hedge it, and then it's like a slow unwind of both the locked and unlocked portion, and it doesn't really affect price as much, like especially on very liquid tokens. So it doesn't really affect what you end up doing. I think what would affect it is like somebody goes to a foundation, which some of these market makers do, and then they just say like, okay, I'm buying this and then I'm dumping the token. And I'm like crazy that people then a good foundation will be like, I'm not actually doing that deal. So
Right.
Understood. Okay, move on to something exciting and actionable for our community. Marco, next page.
Let's see here.
Okay, how can we enjoy Neutrl? What is the product stage right now? What's the GTM campaign to launch? What can I do right now if I want to take part in farming it?
yeah, so at the moment, I mean, Neutrl's going very quickly, to be honest. Like from ideation to deployment to actually getting it out publicly. So we've been pushing very hard on the dev side. That's done now with smart contracts. We did Cantina and Spearbit. No findings. Like, I'm very lucky to have the dev team that I have that have come from other blue chip DeFi protocols also, especially to help on composability side. But I think we'll be out in the next couple of months, like publicly. That's what we're pushing hard for. Right now, what we can do is we just actually launched a Discord. So Tay, who's running like our marketing, we're fortunate to bring him on board also. I think like it's good to get Neutrl out there a bit more now. We just launched that, and I mean, if people want to ask questions and actually learn more about it, we started like putting out more information. And on farming Neutrl, I think like realistically, I think it's just about actually seeing who's interested in the trade, right? Like, I think our bigger thing is that we've been in the market for a while, like from investor point of views, or even trader point of views, or even communities, right? Like that we've been part of. It's really about like it's not really about just capital engagement, but everyone's time is important. So I think like if they want to spend some time learning about Neutrl or actually using it once we're public, it's important to reward people in a like sustainable way, right?
A bit of a random last minute question. What do you think about points?
They're interesting, right? I mean, do you mean points for doing nothing, or points for?
No, just points. Like I just want to kind of get a read on what's your design and thoughts on points.
Oh, on that. I mean, right now it's like it's been a work in progress for 2 months. Our head of DeFi is busy on it, and we're iterating. I think the main thing will be that this is going to be highly composable day one. Like that's what we're pushing for. So across most of the bigger DeFi like protocols where you can use NUSD, so it'll be quite linked to a lot of their like code campaigns and around that. So like actual users.
Got it.
Bro is taking me in circles and not telling me detail. I guess I go away from next time.
You need to buy me a drink or something first, right? I just met you, bro.
Come, bro. Let's go.
Yeah. Okay. I could do with a boba or something, bro.
Oh my god.
Okay. What do you think about the current stablecoin market?
I honestly think we're still in like an infancy, right? Honestly, like stable
Trillions.
Yeah, I definitely think trillions, and I don't think that's not even like shilling Neutrl. That's just like my view on across like most synthetics and stable coins. I mean, we're around like 260, 280 now billion in a pretty bearish like market. I know Bitcoin's at 114 or whatnot, right? But realistically, adoption is like retail isn't here. Like I don't think we're there yet. TradFi is coming, and the interesting thing is, like people have been saying TradFi is coming for like 6 or 7 years. They are finally like coming now, and we are getting like a lot of discussions from normal like TradFi funds or distressed funds. It's like actually think of like OTC as like a distressed asset, and they're like, okay, this yield is pretty interesting. Like if you can deliver me like 15 to 20% like sustainable yield, that's way better than what I can get on like elsewhere, right? Even in TradFi. And it's actual real trading yield. So I think the stablecoin market goes to trillions. Like no jokes. Like I think maybe in the next 2 or 3 years, the entire market will be like a trillion.
What do you think about Resolve?
I think it's honestly like Resolve is a great product. It's a very good product. I think they're a very good team at executing and designing. But at the end of the day, it's going to come down to like how you can keep your community and like work around those incentives, right? But a lot of like DeFi yield farmers, like we are close to a lot of them because like we do that as well, and like it's good. Like it is pretty good product. I think it's very good.
It's a good product. It's just like it's one of the cases where the token price or you don't know what's their next step, etc., etc. And Athena did such a good job. It's hard to compete on a similar concept.
Dude, my take on it is also just because there's a lot of stablecoin founders that I'm speaking with. I mean, like the number one thing they all say is that I don't want to be an Athena beta, right? So like if you don't find your own unique yield source, like which for Neutrl you guys you guys are like one of the first, right? If not the first, right, with like this like specific style of yield source. So I think the industry needs to, like, at least for stablecoin founders, they need to think about it in that sense, because I mean, there's like probably
Yeah.
7 private credit backed stables with 15 to 22 million TVL, right? Like, okay, then like how should I deploy?
No, I agree.
Right.
That is the tricky part,
Yeah.
right? I know they had different a
Yeah.
bit with like RLP, which is a bit more degen on like how it actually goes around. So like some guys do like it if they are big DeFi yield farmers, but you can take, it's not like super delta neutral, right? Like the way you look at it. Athena, look, the first guy I spoke to about this like was Guy, literally from Athena. So and he's an investor. And some of the other Athena team as well, because we're not trying to compete with Athena. Like this is something completely different, right? I think there's maybe synergies, and like we using USD helps us for like the liquid side, etc. But I think if you're just doing the same thing, it's quite painful, right? And it's not actually interesting.
100%.
It's not interesting. I don't know. Like as a founder,
Okay,
you're doing this for 18 hours a day, right? Like every day. So if you're like just doing
You
something,
don't want to be that guy.
yeah.
Okay. What protocols do you think is doing great work, or something that you feel like kind of thing? Like,
I mean, not to like bring it up again, but I think like Pendle right now with the Boris integration that just came out. I think it could be
I don't
very
think people
interesting.
realize how powerful it can be.
They don't. I was chatting to like the Pendle team in Feb, like even when Neutrl was very like stealth, right? But realistically, honestly, they can change the entire game on funding rates. So for like someone like Neutrl, like to be honest, we could become a big user of Boris as soon as there's enough open interest and liquidity, which I think they'll get to. You're hedging out funding rates. So like people, the first Marco mentioned what happens with negative funding rates. I mean, if I can hedge out negative funding rates early, this just boosts our entire. It makes us even better, to be honest. I think that's a proper game changer.
I was having some brainstorms. Like, if you don't mind me pivot this a little bit into the Pendle part, maybe take a few minutes.
Yeah,
So
sure.
I was thinking about it. Can Pendle or will Pendles ever change the dynamic of like the funding rate on perks because of the hedging, etc.? Assuming they will branch out to all, because like I was just thinking that. Wouldn't that add even more shorts on the short side because people can hedge now, and then eventually it'll be even cheaper for people to leverage long?
Yeah, I think like you'd have to look at it on each token, right? Similar to how we would analyze before we do a deal, and like the number of like open interest volume, how many venues. On something big, something like pretty big in the top 100, not really that much, right? Like it really depends. Like Bitcoin, pretty impossible. Like, no, I mean, okay, not impossible for Pendle, right? Maybe one day, but like, yeah, it's too much.
Man got honest for a second.
It's not impossible. Maybe they do it, right? But like at the moment, it's not gonna do anything. And like on the long,
I mean, it makes sense. The market's just too big.
long tail maybe, but I don't know how they bring in long tail assets. Long tail definitely. Like even if you do like 10 or 20 million, but that's still early days, right? I don't think.
There's a lot of interesting design space there. I mean, like even like what happened if like some actors play with the funding rates on CX and so on. Like it's a lot of interesting things.
Yeah, so that's what I'm saying. Like it's very hard to manipulate Bitcoin and very hard to manipulate.
For the big ones.
Look at Athena, right? I mean, they fluctuated between 20-25% of open interest on ETH, and it still was. They become like quite reflective of it, right? The funding rate, but it still manages.
Yeah.
So it's really depend on each individual like token that you're doing this on.
Got it.
Okay. One question before our last questions. Do you have any questions for us? Actually.
Yeah, I think it's what's interesting, right? I mean, you say you have spoken to a lot of actual like stablecoin or synthetic dollar founders, and you guys are pretty clued up into it. Where do you see our biggest issue here, or what do you think is a good opportunity for us, just from your point of view?
For me, right? I think there's a few things. The first is I worry about capacity. Like either way, I'll farm, but I worry about capacity. I worry about unwinding risks. I'm not worried about getting deals. Like, I'm sure there's enough, but like if you do a transparent dashboard, there might be deals that don't want to come on there. Because they don't want the terms to be known. Secondly, is there I don't know, I forgot how long is your deal. Is like 3 months, 6 months kind of thing. I don't know what's unwinding like in a public market. Being transparent about it would be an issue. But again, starting point as a protocol, novelty, good, and then eventually you can phase out into other yield generating to support it, right? And then the second bit that I worry about is token utility, or like not even token utility, that's a fucking meme, but like how do you justify the evaluation, or what do you put in it? Like don't get me wrong, Resolve is a good protocol, right? But like it's an awkward scale where the token is trading at what, like 50 mil MCAP, 150, 160.
There's reasons for that though, right? But anyway.
Bro, you can't do this to me. Like, what do you mean? Like, let me know what's up. I mean, TCM deals, what's up?
No, but go ahead, Behrin.
No. I think like there's always reasons, but like realistically, the market should reprice it at some point. And I actually am pretty bullish Resolve as a team.
Bro, God, tell me more. I'm gonna rage quit this live right now if you don't tell me more.
I would echo again, like for me it's pretty much similar with what Lambro said. The only difference is that, like, at least I don't think I should name names, but there's a couple other stablecoin projects that have expressed that they're really just gonna put all into buyback. So like that's interesting to me, like even right off the bat that they're gonna announce that. So I like, I know there's like this balance. I mean, like if you do it too soon, right? Like Ethena has sort of like this metrics. Oh, we wanna at least hit like 50 million in like revenue or like blah blah before they sort of like do that. That I think that makes sense. But having sort of like a roadmap to hit that is a good starting point. And then on the risk side, yeah, I would say just, I think once the dashboard is out, folks are going to be a lot more comfortable. And then like once you have
Definitely.
like all of these, like,
I agree.
Yeah, composability.
It's
But yeah, like I would say,
trust me, bro. Now, right? Like on it,
I would say
we're not like we're not aware of that. Like it's largely the people that have given us money to run it are just people who understand the trade, and if they are funds or they do it, right?
I know you, bro.
Basically,
the
it's a bit different. Yeah.
I think the one other small thing, the beauty in Ethena is that it's very simple, right? It's very simple. Whereas like I've seen other stable design who's like, oh, we will have like the basic stable coin, then we will have the T-bill bearing one. If you stake it, then we will have another version. I'm like, that's too like, even how you distribute like incentives, that's going to be messy, right? So like I think if you can elegantly wrap the risks and even just to make it even more simple, I think that's the key for sure.
Yeah, it's very good feedback. I think like it's super important for us because we can be happy in our ivory tower, running the trades and the money, but I think we're at a point where we need to actually make sure the education is a lot more than we've done and a lot more transparent, which is what we're pushing for. Yeah, I appreciate that.
For sure. All right, man.
Last question we always ask every guest: what do you think is required to make it in crypto?
Honestly, I wouldn't underestimate the amount of grit you need, actual perseverance, and like mental strength, right? And that's not often it can't be done with one person. Like you really need a team that has like experience, or guys who are losing like 6 or 7 figures, right, personally, or 8 figures, and they know they can come back, or they've been through many cycles. And you need to be grateful that we're in this industry, right? I mean, realistically, we can always go back to, if you wanted to, like TradFi or something like that. But it's something that should excite you to do it. So if you are excited about what you're doing, like not sleeping and like just pushing through, etc., is fine, right? But I think it comes down to like real perseverance and like try and be as healthy as you can. Also, because people underestimate the physical thing, right, and the mental part after a while. Like this last year, sure. I'm sure most people got burnt out, right? Like especially if you're very active. So
chasing memes and then got wrecked. Yeah. But okay.
All right. Thank you for your time.
Thank you, guys.
I
Appreciate
think
it.
that's pretty much it. Again, yeah. Thanks for your time,
I
Behrin.
didn't know what to expect,
you for
so
joining
this was
us.
very, very good. Yeah, very candid.
No,
Did
thank
you enjoy it?
Yeah.
Let's turn off the live. I got to ask man some questions.
All right. Cheers. All right. Thanks for tuning in. All you'll see all the show notes on all of that on YouTube and links to Neutrl. Cheers. Bye bye. I'm gonna
guys.
stop the live.
Bye.
3, 2, 1. Okay.
As it